starts to. Got it.
What is going on, everybody? Thank you for joining our cast coaching section, our session of the day. This is the time where we get to interact with you. So thank you for watching at home. We are live and will be live for the next 1 hour on a few different platforms. So you can catch us on Facebook if you're watching from there. Awesome. You can catch us on Instagram at The Banking Bros. You can catch us on YouTube at The Banking Bros. And you can catch us on TikTok at The Banking Bros. So we are going to have lots of questions coming in from all sorts of people who are just now getting introduced to what in the world infinite banking is for the first time. And of course, those same folks who maybe have been introduced but want to put some questions in the comments and get your questions answered. So today I'm your host, Jonah. My brother, Jeremiah, the other half of The Banking Bros, will be joining us here shortly. And like I mentioned, this is an hour where we get to introduce you possibly to what infinite banking is. We also get to talk through some of the frequently asked questions that we get on our channels and our platforms. I've got a few of them queued up today, so we're going to walk through that here shortly. And I'm excited to kind of walk through with you. So I know we're just getting started. I know that live notifications just popping up on those phones. But if you are watching, it would be helpful if you told me where you were tuning in from. So I'm very, very interested in where you're actually watching from. I am sitting here in studio and in Greenville, South Carolina today. So that's where I'm tuning in from. If you're out there and have the ability to comment, type it in your phone, type it on the computer, depending on how you're watching. I would love to know where you're calling in from and who's out there watching. That would be awesome. But like I mentioned, as you're doing that, today's hour is all about the infinite banking concept. Let me summarize it for you if it's your first time here. The infinite banking concept is about taking control of your finances, taking control of the financing aspect in your life. It is a banking function as opposed to your investment or your savings or this and that and the other. We want to take control of banking, and then of course from banking we want to move out. So okay, I got a few people telling me where they're tuning in from. So Tina from Indian Trail, North Carolina. What's up, Tina? And Marie, also Indian Trail. Marie, we just chatted. I just had an opportunity to talk to Marie just a few moments ago. So thanks, Marie, for being here. Before we jump into it, looks like I've got somebody who's going to be joining us here this afternoon. I'm going to go ahead and add him. Sergio, what's going on, my man?
Jonah, what's going on, brother? Can you hear me?
I got you loud and clear. Yes, sir.
Awesome, man. Doing great. Good to see you.
Yeah, good to see you too. Why don't you introduce yourself for everyone who's watching, and then I'll jump in. I'm going to read some comments here. Let's get into some of the questions that have been asked, and let's see if we can provide some answers, some clarity. But before we do that, introduce yourself to all the folks who are out there listening and watching.
Awesome, guys. Hey, my name is Sergio Loaiza, also out of Greenville, South Carolina, right here with the Do Brothers, the Banking Bros, and I'm with Protect Your Legacy. It's obviously my brand, but we're all connected to these guys with the Banking Bros, and I believe we got a couple other coaches about to join in. I'm going to shoot them the link, and we'll get rocking and rolling.
I love it. Very good. Okay, Serge, I got a couple questions for you. We're going to jump in just some question and answer right off the bat while we let everybody get acquainted and things like that. So these questions are coming directly from YouTube right now. I'm going to start on YouTube because this is where the questions are. Okay, so this is from Localone 1597. He commented on our YouTube video. He says, "Great video. I'm just learning about IBC recently. Is the only time there are tax implications when borrowing money, when it's loaned to someone else, or possibly to your business if you have one? Me just loaning money to myself to get a car or pay off debt or charging myself interest, there's no tax implications there, are they?" So he got some questions about tax.
Okay.
Sergio, what you got in order to answer that?
Yeah. So technically, anytime that you're borrowing money or you're leveraging money from your policy, there's no tax implication. So what you do with it, depending on what you do with it, it's up to you. But if it's coming from a loan, which is leverage off of the cash value, then ultimately, no, there's no tax implication. You can deploy that money however you want. If you're lending it out, if you're lending it out for an investment, those things can get a little bit, I guess, a little bit trickier. But based on my knowledge, and correct me if I'm wrong, Jonah, based on my knowledge, even the gains on that, since it's coming from a loan, it could be a little bit different. But correct me on that. Maybe fill me in a little bit more on. I haven't started lending out money yet
Yeah,
with
sure.
my banking system. I've only been able to transfer over debt, and then my goal is eventually to start becoming a lender, right? A private money lender as well down the road. So that can be a little bit trickier. But as far as a direct loan, nope, there's no tax implications on that.
Sergio, you answered it perfectly, man. There's no tax implications on loans outside of that or from the insurance policy. The only time you're going to jump into anything tax related is when you take the money that you just got from the policy and go do something outside of the policy, like make an investment or something like that. Then, of course, you're going to have tax implications over there because you took the money and you went and made more, right? So you can think income tax, you can think capital gains tax, things like that.
Right.
So, yeah, man, looking good. Let's add a few more folks here to our repertoire here this morning. Sean, how we doing, sir? Nope, Sean, I don't got you. I think you're muted.
How about now?
Yep, we got you loud and clear, sir. Yes, sir.
Awesome. Happy to be here, guys. Was just listening on your conversation. So, yep, I was on both sides of that, Sergio, using the policy for just loans, paying off debt, but now it's sending it out, looking to make some money off of that money. And those are taxes I'm not going to say you're okay with paying, but it's it's one of those rules of the game. So I'm totally cool with those capital gains tax because my money's making me money in two places.
That's it. That's exactly correct. Sean, before we jump in and keep moving any further, why don't you introduce yourself to everyone who's watching so they know who you are as we field some more questions. I think we got one more coach to add after you also, but go ahead and introduce yourself, Sean.
Yep. So what's up, everybody? Sean King here from Legacy Life. I'm out here in the Pensacola, Florida area. Been in the insurance business for a little over 3 years now, but been practicing infinite banking for a good little while, and just working with some awesome people. Sergio, the Do brothers. I think Jesse's popping in here. We got some great coaches here that are extremely knowledgeable. Some people that have been doing this for a very long time. So if you got questions, don't hesitate to ask them. We'll get you all the right information that you need so you can make the best decision possible.
There you go. Sean, you got a question from TikTok. This is from Storm Yard on TikTok, or Stormy Red. Sorry, Stormy Red on TikTok. He wants to know, he's new to this. He wants to know how he starts. That's his question.
How you start. So great question. First, let's have you watch or read some information. We got a fantastic video that'll get you a lot of the base foundation that you need over at saveandspendsystem.com. Number 2 is read yourself this book right here. This is a great book. This is the book you want to educate yourself on, Becoming Your Own Banker. You can grab that off of Amazon. And then let's hop on a cash conversation call, completely free. Again, every service that we offer to you guys is free. We're just trying to get you educated. But I'd first start with that video over on saveandspendsystem.com. That'll give you a good foundation before our call.
I love it. I love it. One more coach to introduce to everybody here. Let's go ahead and get him on the screen. And that is the good old Jesse Durham. Jesse, why don't you take a second, introduce yourself, and tell the people where you're calling from, where you hail from, how long you've been using infinite banking, that sort of thing.
What's up, everybody? Yeah, my name's Jesse Durham. I live in North Carolina, and I've been doing infinite banking for right at 10 years now. Saw it in 2015, and it's been a learning and implementing journey ever since. Met a lot of great people along the way, all of these coaches that are on the call. Married with 3 kids. We've used this idea for all kinds of things, from traveling as a family, paying off debt, making some raw land deals, just some pretty cool stuff.
I love it. I love it very much. Okay, hopefully, Stormy Red, you got your question answered. That was a question from TikTok. I'm going to go ahead and and read some more questions for you guys here. Why don't we start with like our Q&A? I know sometimes we take a second before we jump into the Q&A, but why don't we start with the Q&A today? While everyone was getting set up, I had a couple questions. So this one is coming also from YouTube. I'm going to jump over to our Facebook group in a second, but this one's from YouTube. The question is from Brianna Rindell. She says, if I have an outstanding loan of $500, will the insurance company allow me to pay back $700 even though the loan balance is $500? Which one of you gentlemen's got an answer for that one? Want to take it?
I can take that.
All right, Sean, hit it.
Yep. So great question. And I love where your mindset is at, not stealing the peas. So couple things that we like to do depending on the company that you're with, but we always like to send out an email at the beginning of every month to find out how much paid up additions, how much extra room we have in the policy that month so we can put in extra cash. So in terms of your question, that $700 with the $500 loan out, they will allow you to pay that $500 back to yourself in the loan, but you can't pay extra to your loan. There's no more room. You've kind of filled that hole up. So that money then would go to the paid up addition. So if you ask them and they let you know there is still room in your policy for those paid up additions, that's exactly where you're going to want to send that $200, because that's going to do three things. It's going to buy you more death benefit. It's going to give you more access to cash value. It's going to give you a bigger future dividend. So right on, good thinking on your part. Definitely do what you're doing. Love it.
I love it. What a good answer, right? We do that all the time. Add in additional dollars into our policies over and above what our loan balances is. But just like Sean said, we normally check in with the insurance company first to make sure that they're going to allow us to do it, that we're not going to create any tax implications. That was kind of our first question. Sergio went and answered. And so I love that. Okay, you got another one, Sergio. I think Sergio answered Stormy Red earlier, right? So you've got another one coming in from Stormy Red. They're asking, which insurance policy do they need for this process? That's the question coming in. Sergio, what's your answer to that?
The great question, and a lot of people, you'll hear it on social media, refer to it as an infinite banking policy. And there's nothing necessarily wrong with that verbiage. That's people are just condensing it to help you understand. But ultimately, the real verbiage of it, it's a whole life, a very special, right? It's very specially designed whole life policy with a mutual company that pays out dividends. So that sounds like a lot of verbiage that can get confusing, but in essence, ultimately, as you're learning and growing and understanding the language, it's really just a whole life policy with a company that pays you dividends, and typically it's a mutual company. So, but it's definitely a whole life policy.
I love that. Jesse, you got anything to add to that one specifically? Any other information you think Stormy Red might want to know?
Yeah, I would underscore the type of policy and the type of insurance company as those important parts that Sergio was saying. To put a couple of metrics to that, I would say we are wanting to use a mutual life insurance company. That makes us part owner with the company so that we can enjoy dividends from that company. And we do want specially designed whole life insurance. So that's why it matters that you work with somebody like Sergio who knows these things, so it would be specially designed. But then another thing that occurs to me is that, and I was speaking with somebody just 2 days ago, yesterday, who was looking at a company. They were just learning about infinite banking, and they wanted me to take a look at this company. But they ended up on my calendar, and it was a 60-year-old company. Nothing against that company. I'd never heard of that company before, but a metric that we like to use. And again, like Sean says, if you go to the Becoming Your Own Banker book, Nelson says this in the book, 100 years old. There are just too many companies that have been doing this and being profitable for policyholders for over 100 years. Why use a company that's not been around that long and been that consistent would be a metric that I would put to it. So we like using mutual life insurance companies that have been in business and profitable and consistently pay dividends for at least 100 years, and many more have done longer than that.
I love that answer. I love that. For those of you who are out there still watching, still following along, my request for you is to submit your questions, please. We'll be more than happy to answer them. You've got 4 coaches on this call. that are seasoned in the infinite banking space, that have helped lots of people get started with infinite banking, that use infinite banking policy specifically for themselves. And we have answers to maybe some of the questions that you're thinking you might need to know before you jump into the path and get started. And so that's one of the things that's really important. I think for me, even 10 years ago, almost a decade ago, when I started my first infinite banking policy specifically, I think that was a big deal to have a connection with the gentleman who helped me get started. Therefore, I could bounce the questions off of him and I could figure out, what did you do and what should I do? And do you remember back in my situation and scenario, and how does this work? And what's the number to call and things like that. So if you're out there and you're listening, you're watching, type in your questions if you have them. We would be more than happy to answer them for you. We'll answer them specifically. We'll give you shout out, things like that. And we'll continue there. So, all right, here's my question for the good of the group. I'm going to jump over to another platform, our Infinite Bankers page. And I've got to give a big shout out to Tony over on our Infinite Bankers page, right? I'm going to read his post and then we can talk about this. Okay, so he posted this on March 7th, according to my watch. That's 6 days ago or so. And he says, today marks 9 years of starting his first policy. He started his journey at 23 years old. And since then, he's listed 4 things. He said he funded his entire wedding. He paid off his credit card debt. He paid off his car. And he's right now still working on paying off the student loans. But more exciting things to come, he says. He put that in our Facebook group for everybody to be able to congratulate and enjoy with him, right? And so that is now my question. That's my comment and question for our coaches here. What are some of the things that you've done and accomplished that you're excited about, that when you get to that 9-year mark, you're going to be posting and saying, hey, everybody, look at some of the cool things that we've accomplished here. What are those things for you guys?
Sean, you want to go, or you may go?
I was going to say, you go ahead, go first, Sergio.
Okay. Yeah, I'm excited about this because ultimately we just came back from learning from some of the best in the space, like people that have been doing this for 30 plus years. Now, 9 years is pretty impressive, but 30 plus years it's a whole nother level, and it just expands your mind into the possibilities of what infinite banking really means. It means infinite. So it's the way you think. And so that's the simple psychology behind it. But to me, I'm so jacked that I know that as I continue this path, there's going to become a day where my kids don't even know what a bank is other than our own banking system. So I'm excited that I know that probably from next year on, every vehicle that we ever purchase for our family is going to come from our own banking system. And that's a huge thing. Just that alone, just capturing that money that would go out to other banks and other lenders now into our own banking system is huge. That's just one thing. And for me, I know Sean can tap into this as well. The traveling part, hey, once you get the debt paid off, once you got a system that allows you to have control, hey, go travel. I mean, go have some fun, live life. That's what we're meant to do. So for me, I can't wait to be free so that I can start using our policies for vacations and just be able to obviously fund everything through our own policies and all the adventures that we're going to take with our family. So
I love that. I love that answer. Sean, you're up next. But before you give your answer, sir, we've got to address Stormy Red. More questions. So Stormy Red's asking, 1, do they need a trust for this process? Do they need a trust? And then the second thing is they're saying, hey, they actually heard that you have to wait a really long time before you pull money from. That's what they've heard. You have to wait a really long time before they pull money from these policies. Can you address both of those, please, sir?
Yeah, great question. So a lot of people come into this thinking a little bit more ahead, and I love it. I love the long-term thinking with the whole trust thing in mind. But no, you do not need a trust to get your infinite banking, to get your participating whole life policy started. Again, I want to be careful with my verbiage here. There's no infinite banking policy. It is a product whole life that we use the concept of infinite banking married with. So no, don't need a trust yet. That is a second or third step down the road that you can definitely do, which we totally support. We have connections for that. Great people that we work with in that space. Second question is, what was the second question?
Waiting a long time to pull the money.
Yeah, waiting a long time. So you're spot on with general whole life. Like if I just went to Jake at State Farm and got a whole life policy and I wanted to use it for infinite banking, what you are doing is you are purchasing a policy that is going to be 100% base. which just means it's just being used to purchase life insurance. There is no extra cash added to paid up additions that you can get liquidity to right away. So very simple answer. This is why you come to a coach, because they know if you're looking for a policy with early cash value that you can utilize for infinite banking, a general whole life policy will not work, because that takes a long time to give you access to the cash in the policy. So great questions. Love that you're shooting these out, man or woman. I don't know who you are, but I appreciate you.
I don't know either, but they're on and watching over on TikTok, and we appreciate you. Keep asking your questions. We'll be more than happy to answer them. All right, Jesse, you're back to the original question, sir. When you're writing your post, so I think, Jesse, you've got 9 years also, maybe longer than 9. Are you at 10 years, 9 years or 10 years for your policies?
Just coming up on our 10th year.
Just coming up on. Okay, so when you write your post in the Facebook group, said, all right, it's been a decade now. Here are some of the things that I've accomplished. What are those things? What are you most excited about? What can you share with us?
Yeah. So a lot of the things that we've done over the past 10 years that these guys have already mentioned, doing infinite banking for our family travel, lots of fun, great memories, us paying off student loans, paying off the family car, credit cards. But something that I didn't anticipate that happened along the way was an opportunity. My wife and I were actually right in the middle of our debt recapture, our debt snowball, using our policies. We had 2 at that time. And I had an opportunity pop up in my family, so somebody really close to me who had a financial need, and we were able to step in, make a deal between the 2 of us, fund that family need. And it was good banking for us, and we were able to, supply that need at that time. And that was something that I didn't anticipate. So just opportunities to think more and work more and do business and have financial goals as a family at large. Those kinds of opportunities are really exciting to me as I look back.
I love it. You got a nice comment here for you, sir, from King Nadish. Says, nice beard, brother.
From one king to another, I appreciate you.
It is looking extra nice today, Jesse. It's looking extra nice, brother. And Sean's got the fresh cut. I mean, I guess me and Jonah, we got to step it up.
I know. Well, you know, I'm doing my best. Now, Jesse, we've got a couple ladies that are watching on YouTube from Indian Trail, North Carolina. How far is that from you? You're a North Carolina guy.
I am. That sounds familiar, but I'm not placing it. The biggest town I'm close to is Asheville. So I'm in Western North Carolina. I'm in the mountains. Y'all let me know.
Okay, they'll let us know. They actually did just ask a question over there on YouTube. Oh, let me go back to Stormy Red. Stormy Red is saying that she is a woman. She is a mother. Sean.
Right.
So Stormy, if you've got more questions, please ask them. We will be more than happy to get you those answers. And as you funnel it through. So let me address everyone, because we're live. Sometimes you can come in the middle, right? You didn't start with us, but now you're coming in. So let me make sure everyone knows what we're doing here. This is an infinite banking coaching hour where we answer any question you throw at us for the infinite banking concept. Not only that, we'll give you our experiences about how we've used infinite banking. We'll talk in detail or in depth or however long you want us to go about the infinite banking concept. The infinite banking concept specifically is about controlling the financing aspect of your life. And that could sound weird. And I totally get that, because 10 years ago, I would not have known what in the world that meant if someone said controlling the financing aspect of your life. But what it boils down to is you finance every single thing that you buy. You either legitimately finance it and pay money, interest, cash to other people because you use their money, or you use your cash and you give up money that you could have earned. And that's what we want to take back control of. And that's what infinite banking is all about. So we got a question here from the YouTube land, and they're saying, when you do a cash dump to start a policy, if one dumps in $10,000, how much do you have access to? And how long can you get a loan? So maybe how long before you can get a loan, right? So I've got that one, unless one of you want to jump in.
You go for it.
I mean, all right, let me have it. Okay, I love it. Okay, so Marie, great question. When you do a cash dump in or a lump sum or a one-time payment into your policy to get it started, you actually are going to have the ability first to access that money as a loan as fast as any other money that you put into your policy. So the typical time frame for that is about 10 days. Okay, about 10 days. What you're waiting on there is you're waiting on the money to clear your bank account, right? You can't have it in the pending section of the bank account. It's got to be posted. It's got to be cleared in the transaction history. What that really means is that the insurance company actually got the funds. And then you're just waiting for the insurance company to process the funds, put them in the right area, right? Assign them to your account. And then boom, as soon as you do that, you've got the ability, that money's going to show up in your cash value. Now, your first question, how much shows up in the cash value? I put in $10,000. How much is going to show up in the cash value? So right away, within 10 days, if you do a lump sum dump into your policy, you're going to have 95+% of that show up in cash value. So I'm no good at math, but if we use $10,000, is that $9,500 in cash value? Is that how the math works? Okay, just making sure. So you're going to have all of that money to be able to take out of your policy, use, pay off loans, that sort of thing. Whatever you want to do, buy something new. That's how that works. Hopefully that answered your question. If we did not, let me know. Jesse, they want to let you know that they are outside of Charlotte.
Okay, yeah, Charlotte's like an hour and a half from me. Real close. Fantastic.
Yep, that's exactly it. And Sergio, this one's for you. King is saying, so basically, I think this is to the response on what infinite banking is. He's saying, so basically, you're stopping the unnecessary money lost.
Yep.
Right.
And so I love talking about this, Jonah, because to me, the way that I always explain it to people is who doesn't want to learn how to actually take control to flow their money and pay themselves first. We've all heard one of the golden rules is that, hey, pay yourself first, but nobody knows how to effectively and efficiently do that.
Yep.
This infinite banking, IBC, allows you to do that. Is where does your money go first? And then and that's the thing, that's the idea of the banking function. Where does your money go first? And then from there, do everything else that you are doing in your life. It doesn't change anything else. If you were investing, continue to invest it. If you were paying your bills, continue to pay your bills. If you were paying loans or whatever, continue to do that. But at least you've captured that ability of losing the opportunity costs. And that for me is the definition of paying myself first.
Yep, I love that. Stormy Red wants to know if any of us are in Southern California. So unfortunately, that answer is no. On this call, anyway, nobody on this call, Southern California. Although I do get out to California a few times a year. I got some family out there. So tell me what actual part of Southern California. I'll tell you if I'm coming by soon. Grandma and some other cousins and folks like that are out there for me. So I get out there pretty often. And then Stormy Red wants to know the minimum dollar amount required or recommended to start a policy. Sean, I'm going to give this one to you. She wants to know how much money, what I got to put in to start the policy. And Jonathan is saying he is LA. So I love that.
Nice.
Jonathan.
Yeah. So I'm actually
like
from
LA.
California. So, shout out to that Southern California, Huntington Beach right here. But minimum. Okay. So first things first, when coming in with minimum is we want to shift your mindset, because what you're doing is you're creating essentially a money printing machine. And now it's going to take some time, just like anything. You got to consider your bank as a business. It got to get up and going. And so you're behind a little bit at first, and then you go way ahead because it just gets better and better every single day. But we want to realize once you get educated, you'll realize, hey, it's not how little can I start with, it's how much will they allow me to put in. But just to answer that question directly is, we don't like to start anything smaller than 10 times your current age. So add a 0 to whatever age you currently are. And we say that's the minimum to really get at least the banking function out of your policy and be able to do anything with it, in all reality. So again, there is a minimum, but we want you to have that mindset of wealth and growth and understand. Once you understand this concept, it will be how much am I allowed to put in the policy?
Mhm.
And when you have that switch, you'll quickly, and I think a few of you guys can talk on it, how small of policies you might have started first because you were just kind of tiptoeing into the water, just dipping a toe in. But then you realize as things went on, my gosh, I wish I would have started with so much more.
Yep. I love it. Okay, we got a couple more questions rolling in. Hopefully, Stormy Red, that was a good enough answer for you. If it was not, let us know that. Say it again, put in another comment, and we'll jump back into it. Okay, I got a question from Michael Peters. Michael says he's a broker. So he's asking, do we just do PUAs, paid up additions, or do we do term riders and PUAs? So great question, Michael. The answer to that is depends. Everybody's different, man. We talk to people all the time, right? And we design policies that are specific for them. So sometimes that means just PUAs, and sometimes that means term riders with PUAs. Sometimes that means other things too. There's other options out there. But the simple answer is everybody's unique. Everybody's situation is unique. Everybody wants to accomplish something different. Everybody, right? Does this make sense? And so the answer to that is we customize this stuff one at a time, person to person. Everybody, we don't have very many clients that are going to go a year and then look at their policy and go, this isn't what I thought it was. That just doesn't happen very often for us, if at all. And that's because we're going to take time and customize things. We also make sure that everybody gets a walkthrough. You're going to read this thing. You're going to know what's on your policy before you get it. Anytime that we work with somebody. And so, good question. But the answer is everybody's a little different. We're going to help you out. Okay, Sean, I think this one's for you. Your explanation, sir. King again says, you know what Andrew Tate would say? Just earn more. If you make $1 million a month, you lose 10,000. Wouldn't matter to you. What do you think about that?
Yeah, if you make $1 million a month and if you lose 10K, it wouldn't matter to you. I mean, I guess that's true. I am of the opinion of a glass half full type of guy. I'm always like, hey, I'll just do more. I'll earn more. I'll go out there. I'll get the other job. I'll do whatever it takes to get myself to where I want to go. Not sure what you're talking about on the lose money thing. That's the nice thing about infinite banking.
Not like
we're never losing money. We never lose any money. There is a capitalization period, and because you're purchasing a portion of the money that you're paying in is purchasing life insurance. There is a transfer of risk there, so the insurance company has to take on that risk. That's the whole idea behind insurance. But we never actually lose any money, because if we passed away right when we put the policy in place, I wouldn't call that winning, but your family's going to get a whole lot more than you put in. So
I love it. Jesse, this question's for you, sir, from Marie. She's saying, if someone does not have any debt to pay off, can you use the infinite banking policy like a HELOC and deposit all of your earnings into the policy? So I'm going to assume that she's saying first lien HELOC. You've seen this example of the first lien HELOC where people do velocity banking out of those. So you put all your money in there, you pay down the balance, right? Because the HELOC, first lien HELOC specifically charge interest on a lot of them do the lowest. Sorry, it's the average lowest monthly balance or something like that.
correct.
Then that makes a lot of sense because you're going to pay a lot less and blah, blah, blah. But anyway, the question is, can you kind of treat your infinite banking policy like a bank account or like a HELOC and get all your money in there? What do you say?
So I got a couple of answers for you. My initial answer was yes, you can use a policy that's been specially designed like you would a HELOC, meaning you're building up a value there, guaranteed, that you can access tax-free without the prohibitive terms and conditions and onerous process, perhaps, or more onerous process of a HELOC to leverage. And that's a beautiful thing. So you can use it like a HELOC. Yes, I would say it's superior to a HELOC. And there's several reasons why. Again, watch our full presentation, read the book that you hear us talking about. But the answer can be yes. Now, Nelson, in the book, Becoming Your Own Banker, that you hear us talking about, he says that getting premiums to these policies can equal your full income, but that's your lifetime goal, probably. It's not something that happens overnight. So the answer would be no, you can't use a policy like you would a debit account. a checking account, not exactly like a HELOC account in that particular regard, because I have 6 policies to date, but I've been implementing this concept for going on 10 years now. So I started by picking a portion of my income to go to this private banking system. And then I've just ratcheted up and scaled up and up the amount of my income that goes to this private banking system over the course of time. But it did leave us with the ultimate goal of it can equal your income. The amount of premiums that you pay into this private system, it can equal your full income.
I love that. What an answer.
Mhm.
If that works for you, Marie, let us know. If it doesn't, send another comment and I'll jump in or get somebody else to answer it. So I appreciate that. Okay, before I go to more questions, we got them coming in here. But before I go there, I want to give us a little bit of an infinite banking insight from somebody in our Facebook group. Okay, everybody, this is a post that happened in our Facebook group just at the beginning of the month. So this is March 3rd. A gentleman by the name of Blake posted this one. I want to read it. This is a pretty cool one. So Blake said this was his first use of a policy loan. So that means to me, we got a recent acquisition of a policy. I'm pulling the loan for the very first time. So he actually says that. Started a policy in December, put as much as he could into the policy and paid up additions for the first 3 months. Took out a policy loan of $40,000 and put it toward his house. Then he established a loan payback of $1,000 a month plus a small lump sum at the end of the year. So here's why he did it. He lists it all out. Here's why it made sense for him. He said, 1, he doesn't have any other debt other than the house. 2, he plans to be in that house for the next foreseeable future. 3, he's in the 5th year of his mortgage. And 4, he plans to keep the house long-term as a rental. And then he even went as far as to list the math. And I love that because a lot of people would jump on him and say, oh, the math, right? But he lists the math. He says, here's his math. He said he had a 3% mortgage. His $40,000 extra payment cut down $37,000 of interest in his total house costs. So he's got 3 years to repay his policy loan. And this is a time frame that he made up because he's got as long as he wants. But he made up 3 years. He's going to do it at 5%. So, yeah, he says I'm going to end up giving $3,100 up to the insurance company for charged interest. But I'll probably earn more than that back from the insurance company in dividends. So in total, he's saying I'm going to end up saving myself $33,000 in outside interest and outside money that's going out the door because I decided to do this. And I thought, what a great way to start your infinite banking journey. Now, Sergio, I think Blake is your contact, your client that you're working with and helping with. What do you think about the post? How excited were you to see that?
Dude, I was jacked. So not only is Blake a client, but he's a good friend of mine. We do business in other areas together. And I remember him just starting to wrap his mind around it, asking all the same questions that everybody's on this call is asking, the people that are joining in live. And as I was kind of just walking him through the thought process, because it's really all about how you think. And once it clicks that you have that kind of aha moment, you can get so creative in so many infinite ways, no pun intended or pun intended, right? But then Blake started getting creative. And what's really cool with somebody like Blake, there's some things, some foundational thought process that I gave him, but then he took it and ran and he was like, okay, I've got this. And he gave me more back information, gave you guys some information. He was like, can we do this? Started asking questions and he started getting creative, started getting excited about the idea of controlling your own income, controlling the flow of cash flow. And so I'm jacked because this is just policy number 1 for them. And there's no doubt we've already had conversations about, okay, well, what's my next big step to ultimately capture all my income and not only also protect my family, but really create my own banking system and continue to practice infinite banking in this way. So dude, it's cool. It's really cool to see stories like that. And that's just one of many already of people that I've been able to help. I've got another one we can talk about later in a future call. His story might be even wilder. We're talking about 86, and I'm not going to say names because he might not want me to share that information, but $86,000 of transferred outside debt, transferred in a matter of a couple of months. Now
Nice.
his scenario is a little bit different because of the cash flow he had access to, but it's just amazing what you can do.
I love that. Man, when I read that, so I talked to a young lady yesterday and she was nervous. She basically asked me toward the end of the call, she says, what do you think is best? Do you think it's best to pay off the debt? Do you think it's best to go do the outside investment? Because I've got a couple I want to do. And I told her, well, first, I think it's a personal preference question. Like you need to decide what, does one of these keep you up at night? Like that's a thing. You know what I mean? If you're not sleeping good because you're got this, the house is not paid off thing in the back of your mind, maybe we should start there. Right. But then secondly, I said a lot of times the answer to this question specifically is a math question. It's math. Right. And I love that Blake put the math in his post, because what he said is when I make the $40,000 payment, I save myself $37,000. Right. And so now we've got this equation of, well, could you have made 37,000 somewhere else? And a lot of times, because of how mortgages specifically amortize their payoff schedule and put all the interest up front, a lot of times if you're early in that house within the first 7 years of the house, you cannot go make up that interest somewhere else. It's legitimate. You would have to get the craziest significant return on your investment, and it'd have to be consistent. You'd have to get it like 15 straight years in order to make up the interest that you actually save yourself by putting the money on the house. And so that's one of my favorite things. I love that he put that math in there, because I did something very, very similar to pretty much exactly what he did. I coupled my home payoff process with a recast of a mortgage. But I did that too just a few years ago, because I can't make these numbers outside. And so I've got to put this big lump sum payment on my house in order to pay down the house, in order to now justify going outside and making money, because I wouldn't be able to make that. I wouldn't be able to make that up.
Right.
So I love that. Okay, we got a question from King. Back at it. King wants to know, has anyone read Millionaire Fastlane? And then they want to know, are we the author of Becoming Your Own Banker? Sean, that's for you, sir.
I have not read Millionaire Fastlane, but I did just pick up a bunch of new books this weekend, and I'll go ahead and check that one out on Amazon. And boy, oh boy, I am not the author of Becoming Your Own Banker.
Flip it over.
Yeah, this lovely gentleman is right here, R. Nelson Nash. So again, highly recommend. If you guys are going to learn anything about infinite banking, let this be the Bible for your education. It is 92 pages. There's probably actual reading on 75 of the pages. And we got the perfect breakdown on how you should go about this, because it's not like a normal book. I'm not reading it front to back. There's certain places that you should start first to get the most out of this. But reach out to us. We'll let you know all that information. But get yourself that book. Best $20 you've ever spent.
I love that. Jesse, I'm going to come to you, sir. Jesse, this from Jonathan L. over on YouTube. Jonathan wants to know, can you have a Roth IRA and also an infinite banking policy?
Yeah. So, Jonathan, thanks for the question. It's a wide open world, right? So when people discover infinite banking, many of us, myself included, I had a state retirement. I was contributing to a 401k. I was doing all, I guess, the conventional things. I even had life insurance that I just went out and personally bought because I thought it was a good financial move. And it was. So the answer could be maybe threefold. All right. So anytime you start talking about an investment, which an IRA is, versus banking, those are two different things. So I would point you to recognize that. And again, I don't know where you're at, so you can let us know where you're at in your process. Jonathan, have you seen our presentation video? Have you read Becoming Your Own Banker? But my answer to you is yes. You can do investments and banking. Remember that banking is just, like Jonah said earlier, financing your investments. We all do banking first somewhere. Somebody controls that banking. Somebody profits over that banking in our lives. And then we typically like to do investing. So folks that find infinite banking, they might decide to switch some things up just by adding infinite banking to the conventional investing that they're already doing. That's one scenario. A second scenario would be some folks decide, like someone I was speaking to yesterday, well, hey, I'm going to divert the funds that I used to have going towards this traditional route of investing, and I'm going to start this private banking entity for myself. I'm going to start infinite banking. And then a third route could be that people even decide to access even, and we're not giving investment advice here, but they might decide to access some of those static or liquid or at-risk funds from investments to fund their private banking. So those are 3 different scenarios. At the end of the day, we're encouraging you to just be aware of what's going on so that you'll know what to do. Hope that's helpful.
I love that. I love that. Nelson Nash says that in his book, right? If you know what's going on, you'll know what to do. I love that. Very good. Okay. With that being said, let's go back to some of the questions, right? We've got questions. I want to make sure we answer everybody. So I've got some comments here. I'm just going to scroll down the list and kind of read them. So this is from Punisher VX, I guess, on YouTube. He was responding to a specific video where we actually talked about Roth IRAs. We kind of compared them. So actually, Jonathan L., you asked your question, can you have both? You can, Jesse's answer. But if you wanted to know, Sean and I actually put out a video on YouTube recently that compares the infinite banking concept and Roth IRAs. It categorizes them in 8 different categories and gives you this question, which one makes the most sense for you, that sort of thing. And so if you want to, you can go watch that video on YouTube also. It's literally called search IBC versus Roth IRA. You'll find it. But on that video, we actually had another comment. So this is from Punisher VX. And they say, for those of us who don't qualify for Roth IRAs, unless you do a conversion, and again, you're not qualifying. That's a government-sponsored thing. That's a government reason you're not qualifying. And we can't put it anywhere. We can't put anything else in it anyway. So that's because there are limitations on how much money can actually go in these government-sponsored plans. They're saying, regardless of all that, IBC is the way to go. That is from Punisher VX on YouTube. Okay, we've got Kennedy KW06. Life insurance policy is not a bank. It's life insurance. Sergio, you're up. Life insurance policies are not a bank. It's life insurance. That's her own. That's everything she said in her comment. What's your take on that?
That is a correct statement. We're not talking about just regular life insurance policies, but she's exactly right. So I agree with you. Life insurance policies is not a bank, but a whole life insurance policy through a mutual company that's structured properly can function like a bank. And when done properly, it is a bank. Whether you believe it or not, that's something different. And that's what's crazy is that what's the verbiage? The proof is in the pudding, right?
Yep.
Is that you can't argue with people, and it's not an argument, it's just a lack of knowledge. So I'm not trying to be disrespectful, but you can't argue with somebody that's actually using it like a bank. If they're using it that way, then technically it basically is. You can't call it that, but in essence, what we're teaching and the way that we teach it and the way we structure it and the companies that we partner with allow us to take the banking functions in our life by leveraging these type of policies.
That's right. I love that. For those of you who are out there watching YouTube, Instagram, Facebook, TikTok, this is your last call for your questions. Throw them in the chat, put them in the comments. We want to make sure we get them answered, if we can, before we end our live Infinite Banking Cash Coaching Hour. And before we do, let me at least tell you how to get us, because a lot of people are going to want to ask their questions specifically. Maybe they don't want us to call them out or put their question up on the screen, right? So here's what you should do. After this call, if you are interested in chatting with us, you can do so by legitimately clicking the link that we have in any bio out there. So again, it doesn't matter what platform you're on, Facebook, Instagram, TikTok, or YouTube. If you click the link that's in our description, click the link in the bio, you're going to find our calendar. Once you find our calendar, you can book a call to talk directly with a coach, an authorized infinite banking practitioner, someone who's going to walk you through it, someone who has been using the policy, someone who can answer those questions specifically, someone who's had this process going in their own personal lives for a long time. And if that's you and that's who you want to talk to us, that's what you got to do. Okay. So you've got to click the link in our bio. That's your next step. But for right now, again, last call, get your questions in. Stormy Red, you still out there watching on TikTok? Ask your questions, last couple, or book a call. We'd be more than happy to chat with you. So, King's got a good one for us. Okay. King says, hey, man, this is a question from the book on how to identify fake gurus. Do you practice what you preach? And it is amazing. And is it a major reason that you got rich? We're going to go one at a time in my order. Sean, you're up first. Do you practice what you preach?
I sure do, King. I've got 2 policies on my personal body. We have a policy on my wife, working on a second one, and we have a policy on my son. Got a policy on my dad, got a policy on my sister. So we're big into the infinite banking idea. And is it the major reason that I got rich? I would say my willingness to learn from others and surround myself with people that are doing the right things in the money-making space would be the reason for the wealth that I've built. But yeah, I definitely practice what I preach.
I love it. Jesse, you're up. You practice what you preach?
I do. I've done this as my first and foremost financial paradigm for going on 10 years. I've paid hundreds of thousands of dollars as premiums into policies that I own at this point. And my wife and I have created a multiple 7-figure legacy for our grandchildren that don't even exist yet. Yes, I do.
I love that. Serge, what about you, man?
Love it, love it. Well, King, first of all, love the name, my man. That is my second son's that's what his name means. It means king. But as far as did I, a major reason that we got rich through this, I don't know if all of us are rich, but we are wealthy. And that's wealthy in a lot of different ways, man. So we all practice what we preach here. It's really cool. I'm all in. I'm so all in that I'll be surprised if in the next couple of years, every single penny that I make will go into a policy first. And so, we definitely practice what we preach. We got tons of policies, and we are looking to control every dollar that comes into our household through a policy first, and then deploy it from there. So, yeah.
There we go. King, if you wanted to know about me, I've got lots of policies, man. I think I'm at 10 personally owned policies currently. I've got 6 or 7 or 8 that are business owned. I own them together in a company. So that's why I don't pay attention that much to the number, because those are business owned. We use those for business expenses. But in my family, 10. I'm insured. My wife is insured. My 3 children are insured. I insure some other people as well outside of the family, or like Sean said, the extended family, right? Like Jesse said, we've created this legacy that we're going to pass on. Here's something you can think about, right? When would you ever, as a parent, maybe have a conversation with your child about them one day inheriting a few $1 million? You have that conversation? Probably not, because maybe you're never going to get that, right? Unless you win the lottery, when are you going to get it? But in my family, that's a conversation that's actually on my mind pretty frequently. Well, my kids are coming into the money one day. I know they are. I've bought that money through my infinite banking system. So I need to make sure, now my oldest is only 7, but I need to make sure that I'm teaching him with the expectation, like money's coming. Money's coming. We have money now. We use money, but money's coming for you specifically also. And you need to know that as we move forward, right? And so that's a really cool thing. Anyway.
I love it.
Sergio, Marie says that's what I'm talking about. I love it.
Love it.
Okay. And then King says, nice chatting with everybody. And then he's also saying, can a 15-year-old insure himself? And the answer to that is no, you got to be 18. Got to be 18 to insure yourself. But you can still have an insurance policy. Like I said, my oldest is 7. So I own that policy and I've used it. I've placed it on my child's life. So you can totally do that. But if you want to own and control the thing yourself, you've at least got to be an adult, 18 years old. So that's how that'll work. With that being said, I am double checking that I didn't leave anybody's specific questions out. And I think we've got everybody. It has been a pleasure walking and talking you through the infinite banking concept this Thursday. We're going to be live again with coaches next Thursday, 12 noon. So if you like this and you have more questions or want to tell a friend, bring a friend, do so. Facebook, Instagram, TikTok, and YouTube. We will be live. We will be walking you through the infinite banking concept. Until next time, if you need us, click the link in our bio. We'll be more than happy to talk to you. And until next time, happy banking. We hope you enjoyed it.
I think so.
Now tuned to the banking bro. Said we couldn't make it. Drink up setup, this the life we chose. Gave a lot of game, we never got a lot of things. Bow your head and say the prayer. We taught you how to be the bank.